I was on the management side for a $1.2 billion asset. And I learned a lot.
Oh, yeah.
One of the things that I learned, though, was I am just not a worker bee. I'm not a good worker bee. I don't like.
Hello, you're listening to Ready, Set, Go Real Estate Investing Podcast, presented by Brandon Elliott. This show will be going over all aspects of real estate investing and is intended to educate, motivate, and prepare you to take action on your first or next real estate investment. For more information, please visit BrandonElliottInvestments.com. Thank you for listening and enjoy.
Welcome back, everyone, to Ready, Set, Go Real Estate Investing Podcast. I'm your host, Mr. Brandon Elliott. I'm excited today. It's been a while to try to get you on here, and I'm excited because you've been doing just amazing things within real estate. You're based in Texas, and you're the founder of Vine Funds. And so you really focus on raising a ton of capital, over 400 million to date, but also $1 billion. You just passed, I believe, just $1 billion in private equity funds in and out of deals over the last several years. So really excited to have you on because multifamily is something for a lot of people, for tax benefits and cash flow, and just as a true business, it can help out in so many ways. So Venna, what is up? How are you today?
Thank you for having me. I'm great. Very excited because a lot of holidays happening right now. And, my kids are just waiting to go get all the candy and trick-or-treating and, it's the season for it.
I love it. And what are you dressing up as tonight? Because you got two twins, right? So you gotta do all the kid things and trick-or-treating.
Yeah, I have twin daughters. They're 5.
Okay.
And so now they're at this age where they get to have opinions and decide what they want to do. So I have one daughter that's being a pirate, and she's asked her dad to dress up as Daddy Pirate. So that's what he's dressing up as. My other daughter is dressing up as Princess Jasmine.
Cool.
And so I am actually going to be Raja the tiger, which she's taking full advantage of ordering me around as if I am her pet and she is a princess. So she's going to live a really good day today. And then tomorrow we're going back to me being mommy.
I love it. That's so awesome. Very cool. So talk to us, for any of the listeners out there that don't know who you are, where you're from. Could you give that 30,000 foot view of why real estate, how you got started and how you got here?
Yeah. So for those of you that don't know me, I'm Venna Jetti. I'm the founder of a company called Vine Funds, and I'm a large multifamily owner operator. We've bought and sold over $1 billion of assets in my portfolio. And like Brandon said, we've raised just over $400 million in equity across our deals. So, we know a thing or two about raising capital and having investors, just a little bit.
A little bit.
But I certainly did not start with $1 billion in transaction volume. I started with 0 and built this over. I left corporate America back in 2012 and started investing for myself. Started in single family because, quite frankly, I didn't know that I could be invested in multifamily. I thought I had to be in single family. So I thought multifamily was for Oprah and Jeff Bezos. I didn't think it was Venna Jetti, right? So I invested in single family. There was a week where I put 5 houses under contract in the same week. Oh my gosh, I hate this.
Yeah.
Because it was so much work. And, houses don't cash flow at scale, right? You maybe make on the low end, you might be breaking even, right? And you're buying it for appreciation and equity and the tax advantage, but it's not cash flowing. Or even if it's really well cash flowing, maybe it's $500 a month.
Yeah.
Maybe if you're super lucky, $1,000 a month. And I was doing all of this work for no or little reward.
And the risk with it too. When you have a vacancy, damages, my God, it adds up.
Absolutely. So much more risk. And so then I was like, okay, how could I ever own 10,000 doors at this rate? I couldn't. And that's where, I started looking for the answer. And obviously, spoiler alert, the answer was in multifamily investing. And that's where I went to get the scale and the lowered risk of occupancy, to get the better financing terms, to be able to fund deals easier, to be able to hire somebody who can then be a leasing manager and worry about collecting rent. And we have porters on site who worry about maintenance and repairs. So I don't have to worry about all of that.
I love it. Venna, so how did you get inspired to do that though? Like, was there a friend, family member, somebody that was like, hey, like you should check out this big multifamily stuff?
Yeah, so real estate was actually inspired by my mom. She
Oh,
was a
nice.
successful single family investor. I'm the first in my family to have ever invested in multifamily assets.
Let's go.
And yeah, but the way I got into it, it was actually kind of accidental.
Yeah.
Well, I was going through this whole issue with like, I hate this. I don't want to do single family investments anymore. But what do I do? Because I really loved residential. I loved the idea of revitalizing a community and providing a home for people. And I loved that we could come in and, not be one of these big institutional shops, and we could solve problems that a lot of Americans had. And also, you always need a place to live, right? Like during COVID, you still had to live somewhere, even though you weren't staying in hotels or Airbnbs. You need to live somewhere.
Yeah.
And so I really liked the recession proofness. Is that a word? Is proofness a word? I don't think it is,
I'll
but
take it.
the
I'll
plan.
take it. Yeah.
And so I liked that it was a recession proof asset class. And I had a friend of mine, he's still a good friend of mine today. We invest into each other's funds. He's actually a competitor of mine. But when I started, he was just starting out and he was a few months ahead of me. And he called me up and he said, hey, I have a 200 unit deal in Dallas, would love to partner with you on it. And I was like, yeah, why? What could possibly go wrong?
Everything.
And I literally everything could go wrong. And everything did go wrong. It was a struggle. I cried every night for 6 weeks straight when we were closing that deal. But I'm so glad I did it because we delivered a phenomenal return to our investors. We built a lot of really great relationships. We learned a lot of things along the way. And the first deal is always the hardest. So I kind of got that out of the way and then was able to continue on. And, at that time I had to raise $1.2 million. No one wanted to give me money, literally no one. And I was like, okay, well, the response would be like, oh, come back to me on your second or third or fourth deal. And I was like, well, how am I going to get to a second deal if I can't even get the first deal done, right? Like, It was frustrating. Thankfully, I ended up closing the deal, raising the money, made a lot of money for those investors, but it gave me the springboard to go out and raise more capital. So like last year, the deal that took us over the $1 billion mark was a $67 million capital raise. And so, just the level of what we're able to accomplish now has significantly changed because we continue to grow and we continue to learn and we continue to improve.
So what would you say on that first deal, 1.2 million, it doesn't seem that much in comparison to raising nearly 70 million. So on that first one, though, it was everything. It was like as if you were raising $1 billion. I'm sure that's what it felt like, right? So
yes.
How did you actually navigate and just persistence and just keep on putting in the reps?
Yes, it was a lot of persistence. Look, when I say I cried every night, I really mean I cried every night. I
believe you.
Yeah, like be in tears. And, it's unfortunate because I didn't document it. And I wish I had so that I could show people like the actual struggle of getting started. If you are struggling, it's okay. Like this is normal. People just don't talk about it that much. Yeah. So, we always see the highlight reel on Facebook and Instagram and TikTok. And the reality is I thought that, and this was like a decade-ish ago, and I thought that I had put our investors into some horrible, or not our investors, sorry, my family, into some horrible situation if I couldn't get these investors because we had earnest money that was committed to the deal. And I thought we were going to lose that money. And at that time, I can't remember how much it was. I need to see if I can find a record of it, but it was like maybe $100,000 or $200,000.
It was enough to lose sleep over and to cry at night. So it makes sense. Yeah.
It was a lot of money for us back then, right? Like we didn't have the money we have today. And so I thought I ruined I thought my husband and I were never going to be able to retire and we're never going to be able to go on vacation and that we'd have to eat ramen. Like I literally thought that this was the outcome of losing like 100 or 200 grand at that time. Since then, I've lost, 100 grand in an angel investment I've made into like some random tech startup. And it sucks. I don't like losing money, but I've lost money. I've had, a business we invested in and I lost almost 7 figures in that.
Yeah.
So, I've lost my fair share of money that we've invested. But when you take an investor capital,
yes,
it's a whole different ballgame.
Yes.
Your own money is one thing. Losing investor money.
Oh, yeah.
I could not sleep. And And the problem was I knew this deal was a really great deal. I knew it was a good deal. We had done the underwriting. We'd done the due diligence. It's just no one wanted to give us a shot. And so to overcome it, it was a lot of mindset.
Yeah.
And so, it was working with people, getting advice from people who had done this before. And sometimes just having that support system of people that are like, I don't know what private equity is. I don't know what IRRs or equity multiples are. Like my husband, right? Like he has no idea what any of these things mean. And I remember he said to me, like, if anyone can do this, it's you.
Yeah.
And it didn't matter what I was doing. It mattered that he believed in me to do it. And, he reassured me that it wasn't the end of the world if we lost this money. It sucked, but it wasn't the end of the world. And ultimately, I ended up continuing and keeping on going and being persistent. And from that persistence, we were able to close the raise out and we were able to get that deal over the finish line. And it ended up being a solid deal for our investors.
I love it. Yeah, I think mindset is so crucial for anything, but especially on the very first couple deals, it's like it's your first time. It's like everything is nerve-wracking and terrifying. Yeah. And it's just too much. Yes. Yeah.
And, and in that same vein, I will tell you the single biggest mistake I made, I have two mistakes and they're both kind of intertwined with each other. But the mistake I made was not finding a like-minded community of people who could support me through this, because I didn't do that. I thought I could Google my way into this.
Yeah.
And I did Google my way into it and I did end up successful, but
doing it by yourself is so much more difficult. Yeah.
So much harder. I should not have done that. Like I didn't think a fun fact is I've never paid for a mentorship or a community. I never went past the paywall on multifamily because I didn't recognize the value of what was behind the paywall. I thought it was like, what is NOI? I could Google that. I did Google it. I know what NOI is.
Yeah.
What I didn't realize is having a community of people around you, that's the cheat code. That's the shortcut. So it probably took me a lot longer. And because time is money and there's time value of money, not having done that early in my career put me in a position where I didn't do as much as I could have been doing back in 2015. And I regret that. And, the second piece of that is just not investing into myself.
Yeah.
So I say they're like kind of two sides of the same coin, right? But I didn't manage my mindset as intentionally as I do today. So today I work with a woman. Her name is Rosie Noel. She's phenomenal. And she coaches like a lot of the real estate people, right? Like she coaches with Pace and Heather Blankenship and me and Anne-Marie Norton and, like all the big names that are in the real estate space. She coaches all of us. And the importance of what she does is she helps me manage my mindset. And I work with her. I try to work with her 5 days a week. I try to start every morning off with her. Obviously, like our schedules don't always match up. I can, she has other clients she has to take care of, jerk. But I coach with her at least 3 times a week, at least 3 times a week. And then I coach with her anytime I have any kind of like major decision or major conflict or concern. I always go to her first so she can help me frame it properly and help me think through it properly.
I love that. And the time commitment and the financial commitment, obviously you've seen the ROI. It's night and day. Yeah.
Well, and that's the hardest part about investing into personal development, communities, mindset is it's not like a very clear exchange of value, right? Like you don't know what you're getting out of it. And I think this is interesting too, because you have a mentorship, right?
I do. Yeah.
So you'll understand this. So when you have like a mentorship community, whatever, right? Like set up, what I see often is people go, oh, I'm going to join Brandon's mentorship. And I'm going to write you a check for $10,000. I don't know what it costs, right? I'm making this up, but I'm going to write you a check for $10,000. And I'm going to learn everything that Brandon knows to get to where he got. And he's already done the thing that I want to do. I'm going to do that. Yes, that is partially true. But then there's this asterisk that a lot of people don't realize, which is I still have to show up and do the work.
Yeah.
Right. I still have to do the hard thing. It's the easy button because now I don't have to go out and I don't have to learn what the 3 major credit bureaus are. I don't have to learn how they report. I don't have to learn what to do if there is a report on my credit score that is inaccurate or not factual, right? Like,
Yeah.
you're going to tell me those things, so I don't have to go and research it, and I don't have to try it and learn the hard way. And you and I both know, especially like in the credit space, right? If I validate the credit and I say, oh, yes, that is mine, and I really don't want to pay it. Well, now you haven't really looked at the facts of everything, and they haven't recorded. And now they're going to use that if they're going to file a lawsuit against you, right? Like, and you just don't know what you don't know. And by the way, I don't know anything about credit. I know very little information.
You're good. You're on it.
Anything is factually incorrect, please tell me to shut up. I'm
Stop you. You're on point.
Okay, good. Whew. I'm like spitballing of the things, the little that I do know about credit and the things that I have learned. But like, I'm not going to go out and learn all of the ins and outs. And I know you could run circles around and add like 50 different talking points to the very high level things that I've said. But I would venture to guess there's a lot of people listening to this right now that don't even know what I'm talking about. So if you don't know what I'm talking about as like the most basic beginner, imagine all the information and knowledge that Brandon has to give you. And he can give you information for days. He can give you a whole textbook of information, right? But unless I use it and implement it and I do the hard thing and I take the risk and I invest the time and energy that it will take to be successful, it's pointless. And I think people just need to recognize that when they're like finding the community that aligns with them or the mentorship that aligns with them. Do that, but then also come ready to work and to do the hard things.
Yeah. I always like love to talk about like the Brandon Turner quote of like, you can't outsource your push-ups. And it's just it's so important to realize that if it's meant to be, it's up to me type of approach. And I've always just been a junkie of mastermind groups and education, getting myself into other communities, because a lot of us typically do grow up in environments that aren't as supporting and uplifting. Not always, but it's important to get yourself into those communities that everybody's on the same path. Everybody wants to see you succeed and cheering you on. And you might not see that value initially, like buck for buck right away, but part of the reason why I'm addicted to being in all these groups the last 9-10 years is because if I really look back at my life, everything stems, all my decisions and the prospering and just growth, it all comes from individuals and things that I've learned or years later from one of these groups. And that's why like investing in yourself, it even gets you to the point where that, you're not putting the money on a pedestal anymore and have it control you like a puppet, but you're actually controlling it. Like you said, you lost a couple 100,000, you lost 7 figures on certain deals. It's like money comes and goes and nobody wants to lose that, but it also sets you up for the alley-oop when you're doing, way higher deals and you're not sweating about it anymore. There's levels to success.
100%.
I love that so much. I want to go back for just a quick second of the corporate world. Like, what did that look like for you? What was the mindset from that? What were you doing? And what were you like dying to get out? What did that look like?
No. Okay. So I graduated from college with my degree in finance when I was like 20 years old. And, I mentioned my mom is a really successful single family investor. She was like, great, Venna, come work for the family business.
Yep.
And it's like, Mom, I'm an adult with a degree. I'm not doing that. Yeah. I'm going to do something totally different.
Yep.
And it may surprise you to know, or maybe not, that I ended up working in corporate real estate. And I worked for some of the largest firms on the planet. My most recent corporate was Tishman Speyer, so I was on the management side for a $1.2 billion asset. And I learned a lot. Oh, yeah. One of the things that I learned, though, was I am just not a worker bee. I'm not a good worker bee. I don't like being controlled. I don't like, and the corporate culture in all of these private equity institutions is like very, very buttoned up.
Into your cubicle and stay there. Yeah.
Yeah. Cubicle, stay there. you got to be in a suit every day. You get in early, you leave late. And I don't thrive under those conditions.
More rebel, I would say.
Yeah.
A little bit.
Yeah.
I like that.
I was, and I was just not a very hard worker, quite frankly, in the corporate space. Like, if I'm being honest, I hated being on the clock. Like, I hated it. I was like, let me do the things I need to do, but let me do them on my own schedule, and I'll meet deadlines and I'll do all the things. But they were like, if you weren't in the office by 8:00 at 8:01, my manager would be like, where were you?
Wow.
And it's like, I was like in the elevator on the way up. The workday starts at 8 a.m. And when you're in that type of an environment, it's hard to want to go above and beyond.
Yeah, for sure.
And I just didn't want to. And so I did the opposite, right? Like, so it trained me to say, oh, okay, these are the working hours and there's no flexibility or leeway. So I said, okay, no flexibility or leeway. So then what I started doing is at 4:59 p.m., I would sometimes be like in a meeting and I'd be like, hey guys, we'll have to pick this up tomorrow because it's almost 5:00. I got to go. And I don't like to show up that way. And like, obviously I don't do that with my own business. In my own business, I work like 22 hours a day, sleep 2 hours, and then go back to it. Right. And like, that's how I started my business. So, it's that saying that's like, an entrepreneur will work 80 hours a week to avoid working 40 hours for someone else. I was the epitome of that quote. Happy to work 80 hours, routinely work 80 hours a week.
Sure. Yeah.
Most weeks I work 80 hours a week. I'm happy to do it because I control my own time. I get to decide what I'm doing. Like, right after this podcast, I have like a short 30-minute window and I'm like, okay, I could do some work I have, but I haven't voted yet. So I need to I want to go out to the poll and I want to vote. And so that's what I'm going to do after this. And then I have like our team meeting and whatever, but like I get to decide when and where and how I show up.
Let's go. I love it. So talk to me about some of the learning curves, because you've done a incredible job, especially like I just love to see more women in the space that are leading the way you are, because it's so imperative. Like it's so needed to inspire, other young women, and you're doing it. And so I'm sure there's a lot of learning curves along the way, but what does that look like for you?
Yeah. So learning curve. Wow. There's so many.
Yeah.
There's so many.
Well,
like I said, I had never joined mastermind or community or anything like that. I never paid to join one. I get invited into those rooms now because, I've accomplished certain things that I had to do the long, hard way. I took the scenic route to success. Okay. And in doing that, I'm now in a peer mastermind group. Okay, but it's like kind of like Fight Club, so I don't know if I'm even allowed to say it in
on the hush hush.
Yeah.
Just none of the listeners.
Yeah. So it exists. I probably can't say who else is in it, but there's 9 of us that have done over $1 billion in multifamily. And there's some people in there that I'm like, I get to like talk to you. This is incredible, right? Like, you like fangirl a little bit. But I will say the learning curve for me now is being in a peer group that has completely changed things, because the way that people show up in these curated spaces is just different than the way they show up at conferences, the way they show up in Zoom calls or meetings. It's just different. So everyone shows up with an attitude of like, how can I help you win? Here's what I did, right? Like the guard is down, the walls are down. And so for me, I learn a lot from this peer mastermind that we attend. I get to enrich myself, which is better for my investors. So right now, a lot of my knowledge and my learning is learning from other operators, what's working for you, what's not, especially now more than ever, because the market is in just such a hard spot for most people. And so it's learning and understanding what are current trends, what are strategies that are working for you. How do you view this? How did you handle this? What was your experience with X, Y, and Z, right? And so having that peer group that you can go to and just a network of people you can go to has been really helpful. But if you're starting out, and specifically if you're starting out in business or in multifamily specifically, I'll speak to both those because I have many businesses that I started out from the ground up. We bought businesses, et cetera. Well, I don't know that there's one thing, but the few things in your learning curve, right? First and foremost is don't do things that are not in alignment.
Good.
if they don't align with you now, they're not going to ever align with you. Just don't do them. There will be other opportunities.
Yeah.
That's like,
don't force it over money or one other particular thing. I've done that in the past and it does not work out. It won't.
not work.
Yeah.
It won't. I've done that too, and it just won't work. Find good partners, because you will want partners. You will need partners or people that you can just learn from. Like I said, I have a peer group, but I have a JV partner that I work with. So you want to work with good partners. Do not jump into bed with your partner out of the gate.
Yeah.
Date them before you marry them.
Yep.
See if they show up consistently the same way over long periods of time and multiple situations and scenarios. So that's the second one. The third would be, don't fall into analysis paralysis. This is common when people start, right? There's always good reasons why you can't or you shouldn't. Successful operators, successful owners, successful business people do not care. I don't care that you think I can't do something. That's your limitation. That is not mine. So I'm people who cheer me on, who believe in me. I believe in myself, right? I have a why that is so big that nobody's negativity can ever affect that.
Love it.
And then, the last thing I'll say is there's a lot of new language, especially in multifamily, right? Like, we have very specific language we use. I didn't make it up, guys. I just play by the rules. But we use words like equity multiple and free cash flow and NOI and IRR and AAR and all of these words, and they can be foreign to a lot of people starting out. The first thing you can do is just dive into the language of business, the language of multifamily, right? Like, you need to know what a P&L is. You need to know how to read one. You need to know what a balance sheet is. You need to know how to read one. You need to understand what an LLC is. You need to understand what an S Corp is, a C Corp is. And you don't have to know the ins and outs, but you need to have a general idea so you can have more intelligent conversations with accountants, with lawyers, with potential partners, with investors. You need to have some kind of base level knowledge, and that's readily available. Like, you can YouTube that. You can go to my Instagram and find many of these videos, right? I'm sure Brandon has a bunch of free content on his Instagram. You can listen to these podcasts where I'm sure you will pick up some of these nuances to doing businesses, but you do want to have a base level understanding of just basic financial vocabulary.
Yeah, that's so good. I remember first getting into real estate, there's so much, it's a different lingo, it's a different language, right? And so you definitely want to start picking up, but you also need to just get in the reps. Like, the more that you're on the phone and start learning these things, it's going to help out tremendously. So I love that. Talk to me about partnerships for a second, and then we'll start wrapping it up because I knew that you have to go.
Yeah, go vote.
Yeah. So partnerships, getting slow and steady into a good partnership. Where have you found yours, and what would you recommend for somebody just getting started?
Well, I kissed a lot of frogs to find my partners.
Yeah,
like a lot.
Yeah.
That's a lot of frogs. Look, here's what happens in partnerships. You start off in a partnership, and it's very rare that you start a partnership and it just works.
Yeah.
Very rare. It's like a marriage, because you are now tied to this person for the life of your project, your products, whatever it is. So the first thing I'll say is, don't jump into rolling out a full-blown company if you can help it. You might have to, but first try to see if you could partner on a deal together, do a JV. Maybe you guys do a smaller deal together just to see how it goes. The second thing I would say is, make sure that your work ethic matches that of your partners. That was the biggest challenge for me in partnerships. It's funny because I just spent 15 minutes of this podcast telling you about how I'm not a worker bee, but it's different in corporate America, right? I would show up and be working 80 hours a week. And then I'd have partners who were like, I want to be on vacation. I want to do this. And cool, I get it. You have your own business, but we can't be equal partners then.
Yes, 100%.
Do not split your partnership equally. This is the biggest mistake I see people make. They go, hey, Brandon, do you want to start a business together? Okay, well, we're both valuable. Let's do 50-50.
Yeah.
No.
With the idea 50-50, it's just us two right now.
Yeah. Got it. I've been there, done that, got the t-shirt. Don't do those.
Yeah.
You need to equitably divide the company up based on what value you're bringing to the table versus the value I'm bringing to the table. And then you can massage it from there. Maybe there's like a few percent here or there that you're like, yeah, I understand. I want you to feel valued. And you adjust it, but don't go in and just split 50-50.
So good.
It will be painful. And then the other thing I can tell you is when you are creating these new partnerships, plan for your divorce ahead of time.
Yep.
In the honeymoon period is the best time to plan divorce.
Yeah.
And I know this sounds awful, right? But like you want to have a clear understanding in place. If you don't agree, what happens? Are you just at a standstill? That means that the person who's effectively voting not to take an action is always going to by default win.
Yep.
And you'll be in a gridlock. And there's so many ways to solve that, right? Like you can bring in an outside umpire. You can do a jump ball. Like I have one company with a friend and we do a jump ball because we both appreciate each other. We both respect each other. I think that he's going to work with for the good of the company. I am too. We've been friends for 15 years now.
Yeah.
We've done a lot of business together. And so that company, what we say is we go, okay, look, the first one I win. And then the second time you win. And then the next time I win. But we've never had to use a jump ball ever.
Yeah. Love that. But at least you know exactly what that looks like if worst case comes up. And I've sat down with lawyers in the past in partnerships in that honeymoon phase that you're all excited. And then it's very eye-opening to see all the questions that come out that you didn't think about while you're all so excited about this new venture.
100%. Yeah. And like that, the other question. So I now have my sister's my partner at Vive Funds.
Yeah.
And so I know her well enough to trust her. Right. But then we have a JV partner and she and I did business together before we started JVing together. So I got to see her show up and we've been partnering together now. Like just both our companies have been JV partners for 5 years now. And she has shown up so consistently and she has a lot of the strengths that are not my strengths and vice versa. So we just make a really strong team. But the thing is the most important, I actually was just saying this to her the other day, the reason our partnership has lasted this long, and we're both strong personalities, okay? Like we're not one to back down from a fight. Yeah. And we've certainly disagreed. The thing that has made us such a strong partnership is that we have really open and honest communication.
That's so good.
We tell each other, I'm like, listen, I love that you're thinking of it this way. And there's a lot of trust, right? So I trust that at a baseline, she's not saying this totally ridiculous thing that I don't agree with, right? Because she hates our investors. No, I know she's thinking that this is the best move for our investors. So what we do then is we'll get on a call and we'll spar. And we do this on purpose. And we'll spar and she'll say, look, I think this, and this because of A, B, C, D. And I'll go, great. I disagree because of X, Y, Z, but I think this is a better move. And what happens in that process is, one, we usually find a middle ground where we're like, yeah, okay, that makes sense. I can live with that.
Yep.
Or one of us strengthens our position until the other person is convinced that this makes sense. And so when you have somebody that you can respectfully spar with, it makes the whole project and product better for everyone versus someone who's like just a yes person, right? Like, I don't want you to just say yes because you like me. That's dangerous.
That is dangerous.
To tell me when I'm making a bad decision because you might have a perspective or experience that I just simply don't have.
Yeah.
And that's strong and that's powerful. And so, plan the divorce in the honeymoon phase because it's easier to make these hypotheticals of how you'll dissolve because there will be an evolution of your partnership and there will be a change and you need to be clear on what happens in those situations. Like actually through the course of my partnership with my current JV partner, Ellie, I had a daughter that had a major medical diagnosis that I had to kind of pull back a little bit more than expected. She had a whole baby during the course of our partnership. She had to pull back more than expected. And it's the nature being in partnerships. They're going to evolve over time. So you have to make sure you have flexibility in those scenarios. And like, quite frankly, at some point in the future, one of us is going to decide that we don't want to work as much as we're working right now.
Yeah.
It's the practicality of being in business and what happens in those scenarios, right? Like if, let's say I'm the partner that says, hey, I want to work less. I want to cut down to 3 days a week. She's not going to tell me no, but it wouldn't be fair for me to expect the same level ownership that I have when I'm working 5 days a week, actually 7 days a week. But it wouldn't be fair, right? And she would never expect that if she were the one that was deciding that. So plan for those exits because they will happen. And it's easier to do them when everyone still likes each other and still thinks they're going to make a whole lot of money together. Because when you don't, let me tell you what happens.
Yeah.
I can't tell you how I know this to be factually correct. Lawyers get real rich real fast and businesses start suffering. The people around the business start suffering.
Yep.
It becomes very stressful and unenjoyable for you to be in partnerships. So like I said, I can't tell you exactly how I know for a fact that this is true and it absolutely is painful to go through, but I can say that's without doubt. Yes.
Yeah, that's so good. I love the lingo that you use, sparring and jump ball. It's something I'm going to start using in mine now.
Good.
That's good. Venna, I appreciate you so much. I love your energy, and it's just so inspiring to see where you've come from to where you're at today, and what you're doing. What are the goals moving forward in this season right now?
Yeah, so I'm past the financial goals that I used to have. I think I've checked a lot of the boxes that I cared about when I was young and broke, right? Like I cared about a lot of other different things. Now my goal is really legacy and impact. So I've rolled out the mastermind community where, we have a community of like-minded investors and individuals. And, our core values there are diversity, integrity, and abundance. Like those are the three things that we always show up with. And I love it because I feel like we've attracted people who have these really strong values innately. And so it just multiplies the effect of them. So that's one area I'm really, really passionate about. The other area is just speaking. I speak on a lot of stages. I talk a lot about, the soft skills and the things that people don't talk about. Like a lot of times when it comes to multifamily, and I've been asked so many times, and I used to speak a lot on technical topics. And then I realized that that's not actually the hardest part for people listening to me. It's getting started. It's the mindset. It's like, what does it take here to even get the ball rolling to do your first deal or your second deal or $100 million deal? And so I speak a lot about that. I love personal development. I love personal finance. Those are things that I'm really passionate about. And so I enjoy, speaking on those things and pouring into communities that are diverse and making sure that everybody has an opportunity to fulfill whatever their legacy is and what they're looking to do.
I love it. That's so exciting. Tell the listeners how we can actually get a hold of you.
Okay, so I'm on all social media as Venna Jetti, VEENAJETTI. I respond to all my own messages on Instagram. It's the only place that I respond myself. Everywhere else, you might get me, you might get an admin of mine or a social media manager, I don't know. But if you respond to me or you message me on Instagram, I respond to all my messages there. Unless you send me spam, then I'll ignore you. And I also have a free Facebook community called Mastering Multifamily with Venna Jetti. And that is a community that is dedicated to helping people get their first steps or get to that next level. So, like I said at the beginning, I've done over $1 billion in transactions. So I've learned things along the way. I know what it takes to do a $100 million deal. I also know what it takes to do a $1 million deal. And I'm, at a point where I'm leaving a legacy behind. So I'm happy to share, all of my knowledge. I live in abundance now. And so I share everything I have and know with the people around me.
Heck yeah, I love it. That's so awesome. Well, I appreciate you greatly, guys. I highly encourage reach out to Venna. She is a wealth of knowledge and just an overall good human being that really wants to see you prosper as well. So there is a ton of knowledge that you can gain from her. Check out her free Facebook group. That's a no-brainer. And if you guys want to get a hold of me, you can do so on Instagram. It is Brandon Elliott Investments. Otherwise, our business page on IG is going to be Credit Counsel Elite. If you haven't already checked out what we are doing at Credit Counsel Elite, teaching business owners or even trying to get you out of the 9-to-5 to actually show you how to get up to $500,000 in the next 90 days with interest rates as low as 0%. I want to be able to break that down for you, show you what that looks like, and see if it's a good fit. Check out creditcounselelite.com right now, and we would be honored to bless you there. Venna, you are amazing. Appreciate you so much, and have a blessed day. Get out there and vote now.
Yes, I'm going.
Let's go. See you guys. God bless.
This has been been another episode of Ready Investing Podcast, brought to you by Brandon Elliott. For more information, please visit BrandonElliottInvestments.com. Also, please don't forget to like, share, and leave a comment below. Thanks again for joining. Until next time, God bless.